morning, you're watching Businessworld Live. I'm Danny Laurel. It's 10:03 a.m. this Wednesday morning here in Metro Manila. We are about 30 minutes into the shortened trading day. Please do bear with us today. We are running on a skeleton team. A lot of our team members affected as everyone else by the COVID-19 pandemic, and we say a prayer for them. Now let's go straight to our top story. Both the DPWH and the DOTR are getting a big boost under the 2021 national budget. The Budget Department submitted to Congress on Tuesday the record $4.5 trillion national spending plan, and Speaker Alan Cayetano says the chamber hopes to pass the measure before the end of September. The Transportation Department's budget surged by 70 billion to almost 144 billion pesos, while the Public Works Department's funding increased by half to 667 billion pesos. The government is pinning its post-pandemic recovery hopes on the Build, Build, Build program. And speaking of recovery, JP Morgan says the economy could bounce back and register a 9.5% growth in 2021. JP Morgan expects a more pronounced V-shaped recovery with what it describes as a large rebound seen in the second half of the year as quarantine rules ease. Okay, so let's kick off the market with a report on what's going on over in the United States. You can see on my terminal here, the Dow Jones down by 0.2%, but two star performers here, the benchmark in the United States, which is of course the S&P 500, up by 0.4%. This was actually a fresh high over in the US. The value now at 3,443.62. The NASDAQ also up by 0.8%. That was mainly driven by Facebook bringing up that technology index. Now, apart from that, you've got after markets closed over in the US and China reaffirming their commitment to the Phase 1 trade deal. This, of course, is a review that came after 6 months of that first trade deal being signed. Now, you've got news wires reporting yesterday, at least in Philippine time, that you've got representatives from the United States and the Chinese government holding trade negotiations over the phone, specifically to discuss that Phase 1 trade deal. Now, the U.S. Trade Representative's office said in a statement, this was quoted by Reuters in a report, that both sides are seeing progress and are committed to taking the steps necessary to ensure the success of the agreement. So this may have improved investor sentiment after, of course, the postponement of what was supposed to be the talks during August 15, and that caused market jitters. And that led to Asia Pacific at least opening generally in the green, albeit in a rather mixed fashion. So you can actually see here on my screens here how Asia Pacific is performing, at least as of 9:51. So a little delayed here, but you can see the Topix down in Japan, down by 0.4% as of 9:46. The Nikkei 225 as well. But if you take a look at Hong Kong and the Shanghai and Shenzhen composites, those are all in the green. So they have actually been enjoying several gains here. Whether or not this is related to those talks over in the US with China, investors have to comment on that, but nevertheless, we have been seeing them trading in the green. The FTSE Straits Times, it's over in Singapore, down rather by 0.8%. Now, other traders are saying there's still a lot of anticipation on what the Federal Reserve Chair Jerome Powell in his scheduled speech, which is going to be tomorrow US time, of course, about the central bank's policy framework over in the US, which is focused on a new inflation strategy, what that's going to mean for the US economy. So a lot are still waiting on bated breath. I do want to take a very quick peek at oil. I'm going to try and see whether I can open that on my terminal for you. You can see on your screens here the generic first crude oil. So that's actually priced at 43.31 to a barrel here. I'm going to pull that out for you on the main chart. But that is actually trading near the highest we've seen in 5 months, even as it is sliding down a touch this early morning here over in Asia. But that had traded near the highs in 5 months yesterday. There is a hurricane happening over in the US and nearing the Gulf Coast, and that has borne down on the key refining facilities over in the US Gulf Coast, of course, impacting the supply there and actually bringing the oil back to its $40 to a barrel level. So I did want to take a quick peek at how our virus statistics are going. It's a very mixed picture all over the globe here, and I'll just pull out that chart for you. Bloomberg has a really nice map of how the virus is going. Recall that we had reported yesterday that over in the US, there was, of course, a summer spike, and that has now seemed to be easing. So you do actually see that the outbreak, at least over in Florida and Arizona, has been improving a touch compared to what they had seen during the peak of the summer months. And you can see on my Bloomberg map here, the higher the number of coronavirus cases, the lighter the shade. The lower the number of cases, the darker the shade. So you can still see a lot of areas that are much lighter than others, and some, of course, improving compared to others. You've also got second wave infections over in Hong Kong. Scientists, for instance, in Hong Kong confirmed the first case of a reinfection of the coronavirus, suggesting that immunity is now limited. Now recall, the silver lining to all of this, Moderna saying it's nearing a deal to supply at least 80 million vaccine doses to the European Union. That is as the second wave happens over in Europe. You've got the Spanish Prime Minister, Pedro Sanchez, rejecting calls for another national lockdown. The US states of California and Florida, as I mentioned earlier, showing signs of improvement. Germany, however, despite that second wave, also in Germany, has extended a program keeping millions of people from losing their jobs. So that as they help the economy recover. Now, over in the Philippines, you've got the COVID cases rising by 2,965 to 197,164. So we are now inching our way towards 200,000 total cases. Number of COVID deaths, as of the latest count, rose by 34. Yesterday, we are a little over 3,000 COVID deaths. Now, this, related to our own economy, there is an employers group here in the Philippines saying that the COVID-19 pandemic has caused more than 600,000 businesses to now close because of this lockdown that we've seen. Is, of course, one of the longest and strictest here compared to the rest of the globe. Now, this is according to the country's largest employers group, and this the president of which is Sergio Ortiz Luis. Now, he did mention that in this interview that there is an incomplete reporting of the outbreak that is actually causing a lot of fear towards the pandemic, and also still a lack of transport options here for the employees is actually preventing many from reaching work. Now, another thing to be reporting here is, of course, the government's response and what's going to be happening there. You've got the debt to GDP ratio of the Philippines set to balloon, or at least double from what we had seen, at least for this year. You can see on my terminal here that actually, despite the fact that the government is setting a 3.025 trillion peso borrowing plan for next year, we're still, nevertheless, compared to other emerging markets, at one of the lowest compared to the other countries when it comes to the debt to GDP ratio. So you can see the Philippines is the blue line here, and we are around 38% rather, in terms of the amount of debt that we have to our GDP. Now, recall, this year, our plan is actually 1.4 trillion pesos of debt, and next year it's going to be more than 3 trillion. So that's more than a double amount in terms of debt, and how that's going to be affecting our debt to GDP ratio is something to be watching out for. This will be a record high borrowing plan that President Duterte is planning. He says they will source 85% of the debt locally to avoid the forex risk. So most of them will actually come from the domestic and local debt markets. Now, speaking of debt, I did want to take a quick peek at our bonds here. I'm going to be pulling out the horizontal return analysis of the different bonds and focusing particularly on the Philippines and how our bond yields are actually going. Now, just to recall, we've got the central bank governor saying that he will not be, is likely to not decrease the rates any more further. We are actually at the lowest on record already in terms of our benchmark. He's cut the benchmark rate by 175 basis points, and our yields are at an all-time low. Now, the government on Tuesday has actually rejected all the bids for the treasury bonds due on March 2033. This is according to the latest auction results. And this, according to Treasurer Rosalia De Leon, the billed yields were way too high. So people were asking for more return, especially for a longer tenor. And this was rejected by the Philippine Treasury, who, of course, could not afford to pay most of these high yields that were being asked for. So again, an unsuccessful bid when it comes to the Treasury bonds. And you can see here, just very quickly here, our return is around 3%. So if you do invest in a Philippine government bond for 10 years, that's quite a long period of time. You're actually going to be returning 3% per year. So it is, again, at a very low rate compared to what we had seen at even just last year. Now, I do want to take a quick peek at our local currency, the Philippine peso. That is one bright spot we've been seeing as of late. You can see that slide here in my terminal. That simply means that our peso has been gaining ground since May. So we have actually been strengthening, and that's a good sign whenever we're strengthening, but it's also, of course, a balancing act because we do have a lot of remittances, and those value of remittances go lower as our peso strengthens. You can see that we're trading at 48.523 to the greenback. We are weakening a touch, but nevertheless, emerging markets currencies are advancing. So apart from the peso, I'm going to show you how the rest of Asia is also performing. They're now more in the basket of those that are in the green when it comes to spot returns year to date. So apart from the Philippine peso, you've got the Taiwanese dollar, the Japanese yen, over in China and Hong Kong, still returning, at least strengthening year to date, and the other currencies still in the red. And this, according to Bloomberg, they're saying that these emerging currencies are actually advancing because of the potential of the coronavirus treatments and also ahead of the US-China trade deal boosting optimism. So watch this space. We are, of course, doing the best compared to the rest of the emerging market currencies. I'm going to take a quick peek at our local bourse and how we're opening today. A bit of a disappointment. So yesterday, we managed to finally go back to 6,000 levels. That's a very strong psychological level that we are trying. Our analysts have been watching very closely. But take a look at that. We're opening in the red, 5911.85. That's a slump of 0.7%. You can see how we've performed in the past 1 month here. Recall that mid-August started ghost month, so a lot of investors also in the sidelines right now. But nevertheless, lackluster trading here. Even as we ended higher yesterday on the back of all those US-Chinese talks. We had around 4.6 billion pesos switching hands on Tuesday. But nevertheless, this according to Bloomberg, and I'm going to take out the PE estimates here for you guys, but they've said that the equity gauge has seen profit estimates for the next 12 years cut by 27% this year. We still remain the region's worst performer in 2020. So take a look at that. We are trading nevertheless, since that this is around the March 19 low, where we were trading at 11.4 times forward PE. We're actually rebounded now to 17 times forward PEs. But recall that just a few years ago, we were trading above 20 times PE. We're still the worst performer. Now, this according to Manny Cruz of Papa Securities, the index's recovery hinges on the earnings, but there's still more pressure for the market to go down, especially as earnings are remaining weak with the infections continuing to rise. Now, another thing that's remaining weak is the net foreign selling. You can see that we've seen stocks for the 6th consecutive day here being sold off, and net sold off, that is. So another day of pain here. You can see on my terminal, that's basically a sea of red. There are just some spikes of green, but nevertheless, foreign investors continuing to flock towards safe havens and leaving our local bourse with the domestic traders having to bear the brunt and keep us above water. Now, let's take a quick peek at the financial space. I did want to take a quick peek at the banks. A lot of news coming in from the banking sector. One is a report from the Banco Central. Now, this, according to the BSP, they did a survey of the country's 20 biggest banks in April, and what they've shown is that these banks are expecting their non-performing loans to increase to 4.6% of the total loans by December. So this amount is around 2.4%. So of all the loans, 2.4% will not be able to be collected. That was as of March. And now it's going to rise to 4.6% by the end of the year. This according to Governor Ben Diokno of the Central Bank. This likely increase is still manageable. So what he said, of course, this was on a June report. He did mention that the bad loans will not be as bad as we saw during the Asian financial crisis. Another thing to watch out for the banks, recall that we had reported yesterday that there's going to be a proposed cap from the Banco Central on credit card charges, which is going to be a maximum of 25% for the credit card charges per year. Ben Diokno had mentioned that some credit card charges had risen to 40% interest per year, and this is unacceptable according to him. However, now that the banks will have this limit, some analysts are saying that this might actually weigh on the banks, so they might not start lending, especially since there is this cap here, and they might become very, very picky when it comes to that. But you've actually got Bankers Association of the Philippines and the Management Association of the Philippines expressing support for the BSP's approval. Now, you can see on my terminal here how the banks have performed year to date. One of, if not the worst performer, that's down by 40% year to date. The worst performer happens to be Security Bank, which has lost 50% of its value in just the first 8 to 9 months of the year. BDO as well, our largest lender, is also down by 45%. The best performer, if you can call it that, is Union Bank, which has just seen a slump of 6.5%. Now, I want to take a quick peek at how those are opening today, whether that's any better. You can see Metro Bank, again, I mentioned one of the worst performers in that space, actually up by a touch, 0.15%. So sitting out that sell-off actually and shining compared to the rest of the local bourse. So some quick stocks to be checking out here. We've got SMC, San Miguel, still continuing with their plans. So they are actually set to build 2 toll road projects despite the pandemic, and that's going to be worth 121.8 billion pesos. So 2 projects. The first will be a 26.4 billion peso project that is 420 kilometers from South Luzon Expressway Toll Road 5. That's going to connect Quezon and Sorsogon provinces in Luzon. So that's going to be set to be completed in around 4 years. The travel time for those areas is right now 9 hours. They're trying to cut that to 5.5 hours. The second project is a 19.4 kilometer Pasig River Expressway. That's going to link the east and west sides of Metro Manila. That's around 95.4 billion pesos, hoping to complete that in around 3 years. SMC, however, not necessarily benefiting from that new news. That is down by 0.5%, trading at 101 pesos. Now Corporation, in terms of telecom, let's just try. That's actually not listed right now because they want to be listed. They're mulling a listing by way of introduction for their telecom unit. So that's actually hired Unicapital as a financial advisor and issue manager for a possible corporate restructuring. So they've actually approved an offer of an existing shareholder, Mr. Velarde. He will now be taking a 5.75% equity stake in Now Telecom. Those proceeds are intended for additional equity infusion into Now Telecom. So one to be watching out for. Will they do a listing by way of introduction for the telecom unit? And finally, just a couple of Razon stocks that I wanted to check in on here. MWC, first of all, because Razon's target to actually acquire part of it has gotten the PCC nod, so the Philippine Competition Commission approving Trident Water Holdings to have a controlling stake in the Manila Water Company. So it's going to be around 51% voting interest. here, and that's going to lead to a reduction in Ayala Corporation's share in Manila Water. It used to be 41%, it's going to be 30% as Razon takes the helm. Foreign ownership will also be declining. You can see Manila Water at least gaining. Take a look at that. That's up by 3 and 9% to 13 pesos and 74 centavos. Finally, some good news here to be watching out for. So I actually, at this point in time, do want to bring in an analyst with us who's sharing not just the pain of the markets, but also some optimism here. I want to bring in Regina Capital's equity analyst, Ariel Santos. Hi, Ariel, and welcome to the broadcast.
Hello, good morning.
Ariel, okay, so I did a mouthful. It's your turn to tell us what you are feeling and how the sentiment is going. Can you just give us a brief sentiment check here? Why the Philippine markets is sitting out a rally? The US have touched all-time highs when it comes to the S&P benchmark and the Nasdaq as well. Even as coronavirus cases continue to increase, not just in the Philippines but the rest of the world, there's still a lot of optimism going on when it comes to the equity markets. Why is our own index not following suit?
Maybe it's because of the current earnings that have been released for 2Q20. Maybe the market has been seeing that the companies are not that quite performing or not in line with their expectations. So maybe that's the reason why our local index is not following with the current trend in our region. Also, aside from the fact that our virus containment measures are not that maybe we can say not that effective, or
Okay.
on the early stages of being developed. Yeah.
Okay, now let's talk about some technicals here because you mentioned, from a fundamental perspective, the earnings have been disappointing. But some analysts have said that even with those earnings coming out, even with the 16.5% contraction of GDP in the second quarter, we did not necessarily, go back to the March 19 lows that we saw, which was, one of the all-time lows here. What has made us resilient here, and is this in any way a positive news for you that we will not be going worse than we are right now?
Maybe we can still see that the index to dip around 5.8 at the 5.8 levels, because we see that the technical indicators are somewhat showing bearish sentiments, especially when it comes to RSI and DMIs. We see that RSI is already on the selling region, as well as the DMIs. It shows increasing in selling pressure, and comes along with it is its momentum. So with the MACD, we see that it's still showing selling signs with thinning histograms, which could indicate that the movement of the index could go either down or sideways.
Okay, so still some downside risks there. But Ariel, what catalysts are we hoping for to break back in and sustain the 6,000 level? So we were already there kahapon, and then we're back to 5,900. What's on the psychology of investors now? We're back to a GCQ naman. The government has been quick to say that we cannot afford another stricter lockdown. A lot of the companies have said that the second quarter earnings are going to be the worst now. They're looking at recovery. What's it going to take for us to go back to 6,000 and above levels?
Maybe because this coming for the oncoming weeks, we'll be receiving news about inflation and unemployment. Also, maybe the reason why we're still on below 6,000 level would be because of the reduction in MSI rebalances, and maybe if we will be able to recalibrate our economy our by using the 2021 budget, that would be a good boost for our economy.
Would you say that this approval of the budget is going to be something that was already priced in, or is this a positive development, especially since President Duterte is going to put our debt levels at a record high?
I think that the budget would be priced in within this week, knowing that knowing that we can see it as somewhat of a boost for our economy, especially our budget would be allocated for more BBB projects while maintaining to support our um, Department of Health or the way we mitigate the virus containment. Um, yeah.
Can you comment on the PBB program and the specific stocks linked to that? So you've got San Miguel still bullish on building toll roads. You've got Mega Wide wanting to still rehabilitate NAIA. Despite that, of course, feeling some stumbling blocks. Do you feel that, especially given the budget realignment, that these stocks are going to be able to have a V-shaped recovery once the virus is contained and be able to continue with their plans, or will we be more pain? And is that pain already priced into their stock prices?
I think for SMC, it's already been priced in for their project of two toll roads, SLEX TR5 and Parex. So, according to Sir Ramon Ang, they're planning to push through with this project despite the ongoing pandemic because they believe through this they can help the project to sustain economic revamping efforts by providing hundreds and thousands of employments, especially directed to those Filipino peoples that lost their jobs during the pandemic, especially on the construction side, who lives on a day-to-day daily wages. For M
And
wide,
go
oh
ahead.
yeah. For M wide, I don't think that for M wide, they're they don't they do not have any additional information about it because they haven't been granted with the OPS, with the
Mhm.
operating um with the operating
Original proponent status. Yes.
with that one. So
Okay.
maybe in the near future, if ever they get that OPS, um, um, they would be able to enjoy benefits from it. But for the meantime, they might incur negative EBIT due to that, especially for the construction and reconstruction of NAIA terminals.
Okay, and finally, just a quick comment before I let you go. On Razon actually buying into Manila Water, they finally gotten the go signal. But this was something that markets had been watching very closely since last year. Is why this huge jump? So it's one of the star performers of this Wednesday's trade, given the fact that there was already this excitement when Razon had mentioned that he wanted to buy in. Why is there still room to go here? And do you feel that that's just a sentiment because of the PCC, or there's going to be a fundamental earnings accretion because of this acquisition?
Maybe that could affect on both the market trend and the earnings of the company because by acquiring interest uh, on the water concessionaire, they would be able to enjoy additional benefits from it, especially now that they have interest on the water concessionaire thing. And also, the market has already been anticipated this. So maybe we can still see a possible increase on the price and as well as on the earnings in the coming or in the earnings by year end 2020.
Okay, so this actually has upside to go by the year end of 2020 and will be reflected in the earnings. Thank you so much for joining us this morning. That was Ariel Santos of Regina Capital.
Thank you.
And that's a first look into the business day, guys. Today is Wednesday, August 26, 2020. Catch us again tomorrow morning, 10 a.m. I'm Danny Laurel, and we are One News.